Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Friday, January 15th, 2021. Just kind of cover what I'm watching today, what stands out. Y10 broke out, YTEN, that's Yield 10 Biosciences. Remember the big level there was 842. Multiple reactions. So took that out earlier today. You can see a lot of reactions along that yellow line. And it was another, case of a breakout that didn't, gap up and run away from you, provided an objective entry. It broke out today, took out the trend line this morning. This is a 1 minute chart, and it's been steadily moving higher. I just wanted to do the update because I wanted to say that I do have this first target at 1090, and that is a likely first target if you want to book profits. It's up 28% right now on the day. So if you get a little more upside, remember these are actual resistance levels when you see it here. That 1090, so you might want to sell just a little bit below that if you want the quick trade. And why I wanted to bring that up is we're heading into a 3-day weekend. It's Martin Luther King Day on Monday. Markets are closed, so swing trader has 2 extra days of overnight risk. And there's just something to consider. A lot can happen. I'll talk about what could happen on Monday, but again, longer term, that opens a door. If it can take out 1090 with conviction, this one has a thin zone. What that means is there weren't a lot of trades that occurred here. We had a decent support. We gapped down below that level, back tested, and failed. So the potential's there, and that would, even though this one's already up 28% today, I think it was first mentioned back here, took out this level, $7 was our first buy signal, and so far from there it's already up, 45%, but there's still a lot of potential here if this sector holds up. Now I'm going to roll into something somewhat related. And remember, Y10, this isn't a big, NASDAQ 100 or S&P 500 component. A lot of these some of these ag input stocks I've highlighted, like this one, fly under the radar so they can march to their own drumbeat. And that's the nice thing about them, just like that, what was that? Stem cell, USRM, that's stem cell stock, U.S. stem cell, and these little things really don't have a correlation with the S&P 500. But with that being said, you get a broad-based sell-off. It's going to put pressure on some of the other names that I've highlighted recently. So let's talk about that. First, let's start out. What I wanted to do is talk about the dollar. That's to me, as you guys know, I've been putting a lot of emphasis on it lately. I'd rather be wrong on where I think, the impact that this might have on the markets than not to mention this. So I'm, not to beat a dead horse here, but I've showed many times in recent weeks the extremely tight correlation that we've had for months now between the dollar and the stock market. And so what we need is, I told you the other day, we have this reaction high right here. We need to take that out. We're pretty much testing it now. So we're right at that point. And again, I may be wrong on this, but I think this will be the point of no return, or I'm not point of no return, what I call the point of recognition, where if the dollar can, solidly break out and start to run up here, my next target at 91.081, especially if that gets taken out, then I think we'll see the stock market really take note of the strength in the dollar. Remember, the dollars are already broken out. It seems legit, and the breakout's still very much intact. We slightly overshot that 91.611 target, so that's our previous reaction high, and that's about where we're at right now. So I just wanted to mention that. And there's some other factors to watch for. So I'm leaning that way still. We'll point out we have some negative divergence here on the PPO. Not so much on the RSI. It's made a slightly higher high, but on the PPO we do. And that doesn't. It's not a sell signal, but it could indicate, we get a reversal and we fail to take out that previous high. It could take us back down. Otherwise, if we can take it out, that's going to be quite bullish and burn through the divergence. We won't have any divergence, so that'll open the door for a move up there and possibly more. So that's that. The euro has hit my second price target today, just hit it. T2, these are the targets I laid out the other day. I posted this chart under one of the comment sections in the recent post, in reply to someone asked for the targets. And there's T1 zone. Once that was taken out, we moved down here, T2. And as I said the other day, I don't expect much of a reaction here. Well, here's the thing. We're either going to get it because we still have, just like we have negative divergence on the dollar, we have potential positive divergence. Only potential, because right now the euro is headed lower. It is in a downtrend. It has been since here. It's been zigzagging lower at my second target. And this is the PPO is a momentum indicator, and that's pointed straight down. So should we slice on through there? And here's the thing. We're not going to know. Well, we'll know before Tuesday, remember, but in the stock market, and that's what I'm about to get to in a second, we're either going to gap up or down most likely on Tuesday. Trading's closed on Monday, but the Forex still trades. Currencies, they don't care about Martin Luther King Day, over in Europe or in Japan, where the yen's the second largest component. So they're going to continue to trade over the weekend, and should the euro break this, as I favor, whether we get a reaction here or not, I think any reaction will probably be limited, and we may slice right on through there. I'm almost leaning that way, that we don't backtest this 12,153 level. Look, if we do, it's an objective add-on or short entry, giving you the levels here if you're an active trader in the euro. If you get that, great. But I'm more prone to hold tight on the short on the euro and hold out for T3 zone down here. Now, if that happens over the weekend, remember, between Friday and Tuesday morning when the stock market opens, that's going to most likely cause a nice gap down in the market. So let's talk about the stock market. And remember, we'll use SPY. We can do that. And we'll look at a 5-minute chart. Remember how the week started. We gapped down. Here we are, Friday, Thursday, Wednesday, Tuesday, Monday, right here. We gapped down, and that coincided, remember, with the breakdown in the euro, the breakout in the dollar. And like I said, that was no coincidence. We gapped down there. And so since the dollar broke out and the euro broke down, we've been stair-stepping lower. The stock market has. It's more pronounced in my preferred trading proxy, QQQ, right here. So we can look at it. Again, what you're looking at, the dates are down here. This is Monday's open. There's Friday's close right here. Monday's open, gap down, and we've been stair-stepping lower as the dollar's been moving higher. So it's not as if the stock market isn't, it's not as if that correlation still isn't there. What it is I'm seeing more of a lift in the dollar compared to the downside in the market than you usually get between the two. So I still think that, and again, it's, the vast majority of market participants, trading stocks, they're not looking at different related asset classes like I am. They're just buying what they buy. Dip buyers do what they do. They buy the dips, and that's something else to watch for. The MO lately has been when the market gaps down, a lot of these dips get bought. And in the past, usually you're closing up below the low of the day. So we'll watch this today. If somehow this afternoon we come down and we close down below today's earlier lows, in other words, the dip buyer stepped in here and they've run it back up, not to break even yet. We're still down 0.57% and the negative 0.57% in the Qs. But if they can sell it down into the close, that's going to be a little bit of a change of character. I don't try to read too much in any one day's price action unless it's maybe a solid breakout or a breakdown, particularly on the daily chart. So just to kind of reiterate, we don't have any solid sell signals on the daily chart. This is my daily chart of QQQ. We just continue to wedge and diverge higher, and this is a level right here. This line we need to break. That's at about 305 right there. We need to take out 305 on the Qs, and then you can see some additional levels and potential price targets on the daily. And until then, it remains an uptrend without any sell signals on the daily chart. We did have some sell signals recently on the 60-minute chart. This one's pretty busy. A lot of lines here, but this was my primary uptrend line. It comes off the November 2nd lows right there. And QQQ had impulsive breakdown, backtest, and it's been moving lower since the backtest. And what happened today is we broke this additional trend line I added right here that also comes off the November lows, catches these additional reactions right here. So you have 1, 2, 3, 4, 5, and now 6 we're backtesting. We broke down today and we're backtesting. So this is where I think we go. It's been hard, calling this market down. We've had a couple of sell signals on the 60-minute charts recently, and nothing on the daily. We had potential last week or so. We had bearish engulfing candles that were never confirmed. We never took out those lows after those bearish engulfings were put in. And that's it. That's that level I just showed you on the daily, 305. To me, that's the big number. When 305 goes, that's what I was saying a week ago. That's when I think it needs to go to open the door to more downside. So until then, what to do? Well, if you've been buying the dip, it works, and it's like I say, it's kind of like a yogiism, my own yogiism. It works until it doesn't work, and when it doesn't work, that's the thing. You just need to, adjust quickly and recognize, all these dips kind of came. A lot of these came randomly in an uptrend, but when you start breaking some significant trend lines, and then the dollar breaks out and the euro breaks down, that tells you to, hey, be on guard that one of these dips may not get bought up, and if it doesn't, that's where you might consider your stops. If you're long and you've been buying dips somewhere under 305, you could have a tighter stop. You could have stopped out today on that trendline break. You could have shorted today on that trendline break. You could have shorted back here. There's been several short ops, and we're just kind of moved sideways since that breakdown a week or two ago. Yes, that's it. I don't want to focus too much on the stock market. I mean, the trading ops, obviously the big money has been made elsewhere in individual stocks, like the one I covered at the beginning of the video and many others. Commodities. Somebody asked, I was catching up on emails today. If you've sent anything through the support site or anything in the trading room, just bump me again. I'm trying to catch up there. Somebody asked targets on silver. I don't have a strong read. I'll just go over that real quick because I know there's always interest in gold and silver. Okay, so I see cross currents. Number one, gold tends to move inversely with the dollar, and so a rising dollar would typically puts pressure on gold. But here's the thing, here's the cross currents right now. If we get a correction, a long overdue correction in the stock market, gold could catch a flight to safety bid. So therefore, those are the cross currents. You could see a rising dollar and actually see gold, catch that flight to safety bid. And when I look at the charts, I know I'm going over the futures here. Here's my gold chart. And you can take these levels for how you want to trade it, but gold's at pretty darn good support. I've had these levels here. Those are not intersecting, two lines in close proximity about I think it says 821.86, about 1822 to about 1825. So the bottom of that support zone, call it about 1822 or 1820 if you want. Pretty darn good support on gold. Lots of reactions. We broke it there. We backtested, finally recovered it, and then backtested, went from above. Backtest, 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 backtest. So you get it. A lot of reactions. That's what makes it a good level. The more reactions, the better the level is. So where am I going with that? Well, gold's been locked in a trading range between, I originally had 1855.50 as resistance, but it's a little bit above that, the top of that range. And that's it for you. That's going to be bearish, downside break. That's going to be bullish. I remain longer term bullish on gold. I'm talking, 6, 12 months and beyond at this point in time. But the near term has been, well, it was predictable here. We had these trend line breaks. You had divergent high right there. I warned to that, even predicted that, with a post, show us going down to the trend line. We hit it. Then I mentioned you could, cover and take a bounce. There was a bounce. Then we broke the trend line. And so again, the technicals are working out, but right now, this is an indecision pattern. This is consolidation. So I just want to mention that's it. Look for a break and adjust accordingly. A downside break would likely take gold down below, and I don't have any near-term targets on that. Whereas an upside break, you have quite a bit of, several resistance levels to target. And then silver, let me give you a chart of silver. Silver will usually follow gold, but gold tends to get more of a flight to safety bid during times of market duress. Now the market's in anything but duress right now. It's been one of the most resilient uptrends in many years. Fed is just, again, like I've said it before, they went all out nuclear, where some of the things they did since 2008, since the meltdown there and since, were jaw-dropping and on a grand scale never seen before. But what they've done since is just Wow, kind of crazy. Anyways, so that caused the explosive rally in a lot of just about all assets. And again, how much of that is already priced in, and from what they've done. Here it is. So there's silver. There's my levels right there. That we had a little trading range here, wedge type pattern broke down, and it looks like it's headed down to that 24,366 support. But again, you guys can trade it. I'm staying away from that trade, is what I'm trying to tell you, because my near-term direction's not very. I'm not very confident of the near-term direction. You guys know what I do like. As far as trade ideas, trading ops, I think XOP, one of the better ideas right now. XOP is the oil and gas exploration and production ETF. Was very bullish, set up here in that bullish falling wedge back right up to the elections, broke out, had a heck of a run, and rallied into resistance yesterday and pretty much today. So I already did a video on that, so let's not even spend any more time on that because I did an extensive video earlier today. Okay, so where it really comes or boils down to is this, and this is the euro US dollar pair, the forex, what I'm watching, and we had a rising wedge there, divergence, breakdown, back test, and we moved lower, and that correlated with a correction in the stock market. Then we put in a divergent low right here, and I told you that was a major bottom in both the stock market the exact same day, and the euro. And this is the euro US dollar pair, so it's showing you really the euro against the dollar. And the stock market has been almost perfectly correlated with this, except as you can see, we've had a pretty sizable drop in the euro since it peaked and then broke first my primary trend line here and back tested. I don't know if you can see that. That's why I have two trend lines. That was a breakdown, a back test, and then it broke the secondary trend line, and it's been moving impulsively lower yet. Yet the S&P 500 hasn't gotten the memo yet. It's down last couple of days, but nothing big. So again, that's where you can see targets for you SPY traders: 364.24, give or take, 352.19, so forth and so on. Especially if we continue to get that downside. So that's the point of this video. We're going into a 3-day weekend. The euro and the dollar and the yen, they're all going to continue to trade, and we are at support. And I showed you this on a 60-minute chart. I already showed you E7 euro futures earlier at my second target, and then this is the same levels I showed you on the euro US dollar pair, also at support right there, also with potential divergence on the PPO. So it's either here, bulls want to see this, stock market bulls and euro bulls. They want to see that support hold, and they want to see us bounce, and they want to see us go up considerably higher. That's going to be bullish for stocks if we get it. Should we break that, and that that could happen either one of these could happen over the weekend, and so this is likely going to determine whether stocks gap down on Tuesday in the U.S. when trading resumes, or they gap up. So at the end of the day, if you trade stocks and ETFs only, whatever you take home today is what you're going to hold until Tuesday morning. Futures traders, yeah, you can get futures will start trading on Sunday night. I believe the futures markets are open even though the stock market's closed on Monday. But yeah, Sunday evening, futures I believe pick back up, and you might get a head start there. A few small cap traders, RTY small caps have just gone, ballistic lately. Very strong uptrend, but here's what my 60-minute chart looks like. We've had some wedges here. We had a little wedge that broke down there. Small divergence. Right there was your divergence, and it had a little correction, but we pushed up and formed this secondary wedge right here, which is broken down today with even larger divergence. So should we get that equities down next week, might have to sharpen my pencil on these targets, but we'll leave them here for now. I think they hold true. 1992, then 1895. Let's just focus on that 1992. If we get that, that's going to be a drop of about 6.5%. Is that, yeah, 6.5% for IWM or RTY in this case, small cap futures. I often mention this if you're, just getting your feet wet on futures, or you're, futures, but you want to diversify. You don't want to put a big, big contract in on RTY. M2K, M as in Mary, 2, the number 2, and then K. Those are your E-minis or micros or whatever they call it for the Russell 2000. Trades the same exact price level, so you can use this chart, but it just has a smaller leverage factor, just like the micro contracts for the NASDAQ 100, which is M MNQ, and then the micro ES. So, whereas NQ is my NASDAQ 100, then, the futures that I cover, all you have to do is add an M in front of those and symbol, and then you have just a lower leverage factor. And then same with ES. You have ES, the S&P 500 futures, and then you can put an M in front of it, and those are your micro contracts with a smaller leverage factor, but the same price levels. And what's nice about those two, even if you have a pretty good portfolio size, you can layer in and layer out, average in with multiple lots, take profits, either all or none. Sometimes I'll take profits. Sometimes I'll start taking profits, gradually taking money off the table on something. And leaving some in there. Same thing when I'm scaling into a position. Sometimes I'll either take a hard entry or I'll scale in, and that's what I'm doing. Now with the oil and gas stocks. Since through that video I gave you earlier today, I could see the potential for another 5 to maybe even up to 15% upside in big oil in some of the other oil stocks right now, whereas there's quite a few that are at resistance. So like I said, I plan to add to that position, those shorts on strength or weakness into at least next week and maybe beyond. Okay, and one other one to watch, should that my bullish dollar, bearish euro scenario continue to play out and those breakdowns have more downside or more upside in the dollar, downside in the euro. Just like the stock market has been highly correlated with the euro, and again, inversely correlated to the dollar, meaning one goes up, the other goes down, positively correlated to the euro, because the euro and the dollar move opposite one another. And so this is crude oil. This is a 60-minute chart, just like the stock market. Crude, and by the way, the FXE is the euro ETF right here. So I need to use the ETF, or ETN technically, because they trade, the ETN trades regular session. If I were to use the EUR USD pair, that's trading around the clock, so it's not going to line up with the USO chart. So this is FXE in white, and then USO, which is the crude oil ETN right here, in on the green candles, green and red candles, and you can see they both bottomed back here. It's been a perfect, almost a perfect correlation, and that's simple math too. Crude oil around the world is priced in US dollars. So if the dollar is falling in value, it takes more dollars to buy a barrel of crude, so the price of crude is going to go up, and vice versa if it goes the other way. So same logic here. And what I'm seeing is, and I've been talking about, we may be getting a heads up here because the dollar and the euro have already reversed trend, yet look at crude still hanging up here. And you can see all these major inflection points, where they turned after a correction. They both turned at the same time. They both peaked at the same time, bottomed. You can go through there and see that. So therefore, that's why I keep harping on the currencies right now, because for a long time we haven't had any buy or sell signals. They were in trends. A dollar gave us a couple breakouts, but the euro didn't confirm until recently. So once the euro broke down, then the dollar started to move after back testing its trend lines that it broke out of. So that's it. And so there's another trading op for you. And if you trade futures, you can trade crude oil. You can do the big contract, which is CL, or in this one you don't put an M in front of it. You do a QM. That's your micro contracts or mini. And here, I'll spell it out for you if I can do it with this. QM are your mini contracts or micro contracts for crude oil. Same chart. You can use these same levels. So here's what I have on a 60-minute chart of CL crude futures. I have negative divergence, a divergent high. We had a divergent high right here. We put in an equal high while the indicators continue to move lower. And today we broke this 5250 support. I think I covered it in the video earlier. We're back testing right now. That is an objective short entry. and you can keep a very tight stop. Remember, we're going to head into the weekend, so even these, these futures are going to shut down tonight, and then reopen back on, Sunday. So you have to keep that in mind that you can, this can move on you. But that's my first target down there, 49.47, and so this scenario playing out is largely contingent on the euro and US dollar scenarios playing out. So it all comes back to that. Let's see if the dollar, and it probably isn't going to happen today, guys. If it does, it'll probably be a marginal breakout, if anything, not a clear and impulsive breakout. I'm talking about above this previous reaction high at about 90.7374. We're right there now. So kind of like a to be continued thing. Again, you'll see these, these guys will trade over the weekend. And then that's what we're looking at on Monday. So you can either, play it safe and see what happens on, well, Tuesday, really, if you're an ETF trader. Or you can, take partial positions now. We've already had the breakouts in the dollar and the breakdown in the euro, and I know at least some of you are trading. I've had people ask me, for price targets on the euro and all that. And of course, if you guys want on the ETFs, FXE is the euro ETF, UUP is the US dollar ETF. You can, let me know, and I'll be glad to give you some targets on those. But more so why I do the videos is to just help confirm any analysis on the stock market or those other dollar sensitive assets. Why? Because you're going to get more bang for your buck. If you're trading UUP, you're lucky to make 1% in a day on a good day. The dollar index doesn't move up and down that much. The trends are a lot smaller. So, that's why Forex pairs and futures, all that are leveraged because of the low volatility there. Okay, just to wrap up, I still like that copper, short on copper. Copper, broke down here, put in divergent high. It's been moving sideways, needs to take out that 2168. Again, this would also be contingent on, the dollar continuing to rise and the stock market correcting, because then you'll most likely see money come out of these industrial metals. So there's copper. Let's see, palladium would be another one. It's precious, but more of an industrial metal. Palladium has here, I'll just show you the nice clean trend line there. So there's your trend line break on palladium. Minimum targets down here about 205. Aluminum, I don't think you have any TN that tracks aluminum, at least not that I'm familiar with. You can look at this chart here, aluminum index, and there you go. You have same story, divergent highs. So industrial metals will most likely correct if and when we, well, not if, but when we finally get that correction in the stock market. So those are some other potential trade ideas, and I already covered crude oil as well. Yeah, let's wrap it up here. Keep the video under 30 minutes and get it out to you guys. So if I see anything else before the close, I'll do another update. Otherwise, we'll pick this one up on Tuesday morning. There, have a great long weekend, everybody.